There have been a few new animals which have cropped up, which have caused a fair bit of discomfort in the market in 2019, especially the loan against pledge share issue. And that was a big one, which came as a bolt from the blue, and a lot of investors were impacted. So a large part of the time and energy of the market has been really consumed by that issue. Do you think that this space is going to be out of bounds for the corporates to leverage their position, especially the promoters? And are there lesser avenues now available?
It has become very difficult because I think all the sort of ambiguities have been systematically, all the loopholes have been closed. So it's going to be difficult now for the loan against shares at the sponsor level. But I think it's a case of overcorrection.
Yes.
And we have a habit in India that once there is a problem that has been identified, we sometimes come to it with a blunt instrument, and there are a lot of unintended consequences.
Right. So my question
therefore, I feel that I think the regulation of this instrument has gone too far.
All right. So to the moot question, who's going to provide the funds which is required for the repair work? Private equity, foreign inflows, and will the Indian corporates limp back to normalcy, which you said in the second half they could be coming out?
See, I think the Indian entrepreneur will have to start getting used to lower levels of equity control and finding a way of working through how to structure their rights where they can continue to have influence but without absolute control.
That we saw in Z Entertainment kind of a situation, right?
Yeah, I won't sort of take names. And the second thing is, I think the Indian mindset will have to start getting used to partnerships.
Yes.
Because partnerships is the way to go, where you can bring in somebody who has the cash and the equity and sometimes the technology as well. So I think Indian entrepreneurs will either completely sell out and start something different, or they will start getting used to a partnership model. So if I were to forecast the next couple of years, I think the nuances around a partnership model and how you share control and governance and risk, I think is going to be the new invention in corporate India.
So very well put, Mr. Shroff, because this has also been in the limelight because of certain instances where the promoter-investor relationship has also been questioned in the recent past. We saw some major events which had highlighted the issues over here. How do you see this relationship going forward? And do you think the present events have really dented that relationship and could be a cause of worry going forward as well?
I think Indians learn fast, and there have been these bad examples where I think some of that has forced a rethink on the model. But there is no choice, and necessity is the mother of invention. So as you rightly said, if so many of the avenues have been closed, where is that equity going to come from? And other than a new era of partnerships with foreign sponsors or foreign strategic partners, there don't seem to be too many options. Whether it's a good thing or a bad thing is a moral assessment, and I'm not going to get into that, but it's bound to happen.
And it all boils down to corporate governance standards, which need to be redefined in the country.
Absolutely, and I think the partnership model will definitely up the governance standards.
Right. So some of the old business houses who are known for not having equity partners on the company and on the board have in the recent past really taken private equity and
strategic partners
as well. So these are all difficult times which calls for these survival techniques.
There's another angle to it as well, because many of the corporate houses are also going through generational transitions. And these partnership models may be an interesting way of achieving that as well.
So we are clearly seeing a tectonic shift in the way our business houses are. Do you think at the end of 2 years, Mr. Shroff, we'll see a completely new regime where the old guards would have perished and some of the new companies would have emerged as the top companies? Do you see that?
That might be a bit of an overstatement, but there are a couple of themes over here. I think you will see 2-3 things. One is, I think you will see a partnership model. So if you look at the top 50 or top 100 groups as well, you will see many more partnerships with foreign sponsors or foreign strategic partners. I think you might even see some 3-way partnerships where the state also, depending on the industry, there might be 3-way partnerships of the state an Indian entrepreneur and a foreign partner.
Right.
In the technology space, that may well happen. And in the Indian corporate mindset hasn't adjusted to this. So even the documents don't exist for it, or the regulatory framework, there's not enough experience on that.
Right.
So what you will see and how India will have to reinvent itself is to come up with these models of how they're going to make, how will they manage and how will they govern? How will the company really project itself in the marketplace? What happens when you also take the company into the public market? These are all unknown and somewhat exciting questions.
Right. Has that particular process already begun?
Yes.
Do you think that there is a mindset for that?
Absolutely.
All right. And
absolutely. And those who are thinking ahead, those who are just now kind of a bit obsessed with solving their current problems haven't got to this yet.
Yeah.
But for those who are thinking 10 years down the line, we can see them thinking
exactly the reason why we are holding this conversation, to be ahead of the curve, to understand what are the various themes which are going to play out beginning 2020. Okay,
two-way or three-way partnerships is what I think is going to happen.
All right. And when it comes to the overall fundraising activity, of course, Canadian pension funds have shown a lot of interest in the last few years. I think they have been the biggest fund provider. Blackstone has played a very important role in especially the real estate space. Some of the other private equity funds as well. Do you think that we have new pockets of these investors which could be making their way to India? Or do you think that if there is a risk of an interest rate hike in the developed world, then the money that is really making it to India would also stop?
No, I think there are more of these as well. There are several sovereign funds, there are stressed assets funds. There's stuff from Australia, the funds who are looking at the Indian market. There are the European funds looking at the Indian market as well. So Canada is, I think, way ahead, but there are others trying to catch up.
All right. So in the last few minutes, let's just boil it down to the gist of what we are seeing in 2020 as we crystal gaze this year from deals perspective. First, IBC stressed asset situation will take most of the time. Do you think SR Steel judgment has really set the stage for many resolutions to happen quickly?
Yes.
And do you think that IBC process has been so far a fairly successful process?
I think, yeah, if we take a 2.5 year sort of view, I think it has been, there have been ups and downs, but I think we're at a good spot now. There are still one or two problems to be resolved, like the Bush and Power problem and the ED attachment, and I think those issues are still scaring people.
Yes, and personal guarantees.
Yes, so I mean, but there will always be a bunch of unresolved issues at any given point of time. Even 10 years from now, if we're having this interview, there'll be still a list of 3-4 topics that need to be solved. But so therefore, let's take a more general view. I think it's in a good place.
All right. And when we talk about consolidation in sectors, do you think there will be hectic activity as far as consolidation is concerned? And in
I think more in real estate and financial services. And the others, it's very fact specific. But I don't see a mass kind of consolidation theme in various sectors. They're not capable of being consolidated because of just the industry dynamics.
And when it comes to overall fundraising, do you see the activity going well? And do you think the investors will only cherry pick the good companies and they will get maximum?
Yes, it's going to be very selective. I think you'll see the themes of private equity. If the stock markets remain reasonably buoyant, I think you'll see more QIP activity and you'll see partnerships. And
foreign strategics, are they going to make their way into India? It's only the fund houses which have been coming in so far.
It's a mixed theme because, you know, whilst they salivate at our market, they also get scared away by this perception that India is just too hard. And then every now and then some mega bad story comes up, which may have its justification as well. But when people read it in the media, 3,000 miles away, then they don't understand it. And then they back off. Right. So for those who have the appetite to navigate through the Indian system, they will come. And there are more of those now because there are not too many opportunities in the world, frankly. If you look around the globe, India still looks good. All right, India still looks good. In fact, most of the deal makers whom I speak to say that yes, economic activity is slow, but we are very busy. So I think that's going to be the situation for this year as well. Absolutely, we've had an extremely busy year. And I always say that your community or the lawyers' community is immune to any economic downturn.
So looks like it's going to be a good revenue generating year for you as well.
Inshallah, as they say.
All right. Thank you. Thank you so much for all
you.
your insights into the year 2020. All the best for the next year. Thank you so much.
Thank you. And congratulations on your new studio.
Oh, thank you again. So that was Cyril Shroff, crystal gazing on how the year 2020 is going to be when it comes to the deal street. Thanks so much for tuning in and stay tuned to CNBC TV 18.